Walker from 361 is with us. Evan, you spent a bit of time today looking deeper into Boxer. You've been telling us recently that Boxer is going to be a stock that you're going to want in your portfolio. Just tell us a little bit of the rationale there and where it comes from.
Hi, good evening, Alec. Boxer is actually a business that has been around since 1977, KZN, Richard Bay based. Pick n Pay acquired the business with about 50 odd stores in 2002. That was probably the best acquisition that Sean Summers ever made, given the expensive growth over the years and just how good a business this Boxer business actually is. As we know, it's a sort of hybrid, deep discount retailer situated predominantly in the rural areas, with its strength obviously being KZN, Mpumalanga, etc., but now expanding quite rapidly into the Western Cape. And with a store profile that looks like they can add approximately 30 to 40 new stores per year for the next couple of years going forward, which is roughly about 3 to 4% space growth in actual just dry grocery stores, and then about an additional 30 to 40 liquor stores, which now accompany, and we've seen all the other retailers do it, accompany their standalone base of stores across the country. So, this is going to be a business that for the first time we're going to have direct access to the bottom end of the market, or the bottom to lower middle end of the market in South Africa. We've obviously got access through ShopRite, but not direct access because you're getting the exposure to Checkers, Usave and ShopRite. So this is a new listing that's going to be around about 26 billion rand. So it's a sizable listing for the SA market. But I think what's attractive here is the fact that it's going to have, visibility certainly around 3 years of growth rates in the 10 to 15% mark.
So why is Pick n Pay hiving it off, given that it is a gem, as you've explained?
Yeah, unfortunately, Pick n Pay came into this year with approximately 8 billion in debt. A loss-making Pick n Pay supermarket business, as we know, underperforming quite badly. Bad reinvestment decisions over the years. Sean came in to resurrect the business. He's done a lot around closing underperforming Pick n Pay stores. But in order to restore the Pick n Pay balance sheet, they did they did a rights issue of approximately 4 billion earlier on the year, just to restore liquidity for the existing Pick n Pay business. And this is the second phase. So this now will bring, in the region of about 8 to 9 billion, approximately 8 billion into the Pick n Pay balance sheet. That'll give them a fresh balance sheet, a fresh start, and hopefully the ability for Sean to resurrect the Pick n Pay brand over the next couple of years. I think it's definitely doable with balance sheet on your side. Obviously, it's going to be a hard ask given the slippage that we've seen in market share from Pick n Pay. But I think it's still, with a more aligned store base, with a better offering, and they have got a very good clothing business in Pick n Pay. Certainly we're hoping the prospects of profitability over the next 2 years, is on our side.
He must be quite a guy, Sean Summers, because he did this deal, which is now, in many ways, rescuing Pick n Pay from a terrible situation that it's in. As you say, big losses there, heavy debt. And had Sean Summers not done the deal back, 20-odd years ago, they wouldn't have had this asset that they could have sold off. But my question has to be, if the rest of Pick n Pay has been so badly managed while Summers wasn't there, why wasn't Boxer contaminated by that?
That's a great question, Alec. I think for Boxer, they had a very set profile of what they wanted to do. They run a very, no business is easy, but they run a very simple retail philosophy. They run 3,000 KVIs, known value items, to the consumer. They run as I said, a deep discount format. They try to obviously keep pricing at the forefront of their business. They run a very lean operating model in terms of their cost structure, obviously their base, their distribution base. So they really try to keep costs low in their business. No frills, no fancy counters, no big delis, no big butcheries. I mean, they do offer that, but no, not the frills that you and I are used to in a Woolworths or a Super Spar or even a Pick n Pay or a Checkers, and that. So they run a very low-key operation, and in order to penetrate the market, both the informal market and obviously the big rural markets that sit out there, this offering has certainly worked to the public, and it comes across really as price predominant. That's their leading edge in this market. It's just holding margin, obviously buying in huge bulk, sticking with the bulk. In fact, using the opportunity of their balance sheet to buy into big promotions with all the manufacturers in South Africa and often holding more stock, but then have the ability to service the customer with low prices. So it's been a business that's just been well run. Hats off to them that Pick n Pay actually never meddled in the business throughout the years. I think they realized it was a business that was on a perfect trajectory. They didn't have to do anything to the business. They didn't have to meddle. I think they do offer good services to the business. What was quite enlightening to me today was the fact that, how skilled they are in, the service element of the market, which has become so apparent over the years. All the money transfers, all the banking. They were explaining to us today that you can open a bank account within 2 minutes in a Boxer branch with different types of banking. I mean, obviously you can redeem your grants, you can draw cash, you can deposit into a bank account. So they're certainly at the forefront of offering all the technological angles of retail, right up there with their big major competitors. And in the last month or so, they've now gone out and offered a loyalty program as well to sort of challenge the likes of the other big competitor in the market. So they're certainly, doing whatever they have to in retail. I think they've got a footprint. They've definitely got a big footprint, which is going to grow. And that element of the market where I think there's still, Alec, this, we call this rural, informal population market of South Africa. We just don't know enough about it. I think it's much bigger than we estimate. I think population size of South Africa is much bigger than we think. And certainly this informal market and the market out there still has a lot of capacity to grow. And obviously, the more formalized retailers can take share from more informal-based retailers in the market.
Well, I'm looking forward to talking to Gigi Alcock about Boxer, because that's an area, the informal sector, he knows very well. But if you consider, as a South African investor, as the tide rises or raises all ships, would you say that when it's listed, and maybe you can tell us exactly when that's going to happen, that it would be for a long-term investor in South Africa, one of those stocks you must put into your portfolio?
Look, I think so, because these very good business models. I mean, you spoke about good Bidcorp earlier. I mean, that's a stock that we just think everyone should have in the portfolio, some Bidcorps. And we just think it's a fantastic business. Shoprite is one of them. Clicks we've spoken about is one of them. And I think Boxer can certainly, step up. You might find a little bit of, frenzy at listing. The listing is due for the 28th of November. You might find a little bit of opening frenzy. I would probably wait at the market. It's already, I think 3 times oversubscribed from obviously, the institutional investors alone. So I think there could be a little bit of frenzy. I don't think you dive in at the onset, but I think you wait. There's always, market. One thing we've learned, Alec, in 25, 30 years of doing this job, you get a second and third chance at everything, And I think this is certainly a stock to me that's got a couple of very, very strong structural underpins to it. They're going to pay out a dividend. They're going to de-gear this business quite quickly, and there's enough propensity to grow in that end of the market just with the plans that they've got aboard already. So I think this is something you could quite comfortably sit back with. Just take the dividend, watch, and then just watch the growth of this over the next 3 to 5 years. But I'd be a little cautious just at the onset because it is a big listing. Institutional investors are very hungry to get their hands on something new in their portfolios. As you know, it's a market where we haven't seen new listings for a long time in South Africa. I mean, I think there was speak about getting Coca-Cola back, but we haven't heard anything more. And obviously, we're still waiting to see what happens with the outcome of this multi-choice, potential Canal Plus reverse listing on the JSE. But there's been very little additional offers for us as institutional and unit trust investors.
Evan Walker is with 361. Thank you, Evan, for putting getting our radar working now on a stock that, as he says, you got to put into your portfolio. I like that idea about Bidcorp as well.